Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 15th, and we do got a bit of economic news releases here, so we'll jump right on into it. And we'll start off with the weekly jobless claims. Last week, we had about 361,000 people applying for unemployment. We figure the forecast go up about 380, and it jumped up to 439. So that's the most we've seen in a long time, actually, maybe even a year. I don't think we've seen 400 in maybe since last year when we started dipping below the 400 level. So that's kind of important to watch. A lot of that's being attributed towards Sandy. So we'll have to wait and see if that's true or not. And then we got next item to note is consumer price index, or the CPI. This is the index where you look at for inflation numbers on the consumer level for the month of October. This is the headline. So we got 0.6 back in August or September rather, and we figured it'd come down to about 0.1, and it came into where forecast came. But if you strip out the food and energy, which is the core, this is the number we truly look at because of the volatility of food and energy on any given month. We had a 0.1% in September, and we figured that it would remain the same, and it jumped up a little bit to 0.2%. So if you remember yesterday, we had PPI where it decreased, so it went backwards, and for CPI to consumers, it went up a little bit more. So we'll take a look at the manufacturing, the Empire State Index in the New York region for the month of November. We had a negative 0.2 for October. We figured it would be about the same, and it was negative 5.2. So still at a contracting space. Again, this could be kind of attributed towards Sandy as well. And then we got the Philadelphia manufacturing, or Philly Fed index as well. So we have manufacturing New York reporting today as well as in the Philadelphia region. And last month, in October, we had 5.7 reading, and we figured it would slow down to about 3, and it went at negative 10.7. So not good reading in the manufacturing side of things. So we'll jump over to the headline news right now. And on the headline news, stock market's down. So we had those technicals. They weren't too, obviously, a lot of it's already priced in, so they're not really expecting great numbers on those, so they're kind of building that in there. But some of these other ones here, like the European Union officially hits into double dip recession. So they had the numbers, and they had 2 consecutive months where it's decreased, and so officially they're in the they've had a double dip recession starting in Q3. And then also another note in Europe is Greece is basically, I'm hearing that Greece is supposed to be running out of money, so it might create a lot of chaos over there, as the EU ministers still haven't decided as to how they're going to disperse the bailout funds to Greece yet. So that's something to watch out for, that they're supposed to be running out of money next week. And then also the fiscal cliff is still on everybody's minds because it doesn't show any signs of any aversion. So basically, they don't. There's concerns that the president and Congress won't get together and create a deal in time to be able to avert this fiscal cliff. So that's where the concerns lie here, because they haven't been able to come into any conclusions in the past, and doesn't seem like anything might get done again. And then also Fed member Lacro speaking at a conference earlier today. He's been kind of dissenting on the different votes on the Fed, and what he's been basically, he thinks that the Fed should stand pat, not to be easing any policy, because we do show some signs of strength in the economy. We shouldn't be buying extra bonds and stuff or easing the policy. So he thinks we should stand pat and not to be easing. So that was with his comments. And then another note was mortgage delinquencies and foreclosures rates have dropped. So those parts have come down. The foreclosures, if you look at the numbers more closely, yes, foreclosures have dropped, but you're starting to see a lot more short sales in that regard. So a lot of people, instead of allowing it to go foreclosure, are going more towards a short sale process. Now we'll jump over to the bond market, see what the interest rates are looking over here. We start off, as you've seen, we had a pretty nice run up yesterday, almost touching the 10-day moving average, and then we pulled back. So we ended up being up about 12 basis points versus 21 for the day yesterday. Today we start off 9 basis points lower, and now we're up about even. So right now interest rates are about the same as where we left off yesterday. There's no difference, as you can see, the 104.84, 104.84. We do have potential, if we don't get up above the 105 for some type of support, we might go sideways level, and we could see a drop down to probably about this level here, which means rates will go up. Long term, we do feel that rates will go up, but right now, with everything going on, it looks like we could get pushed down a little bit for some type of correction again, and then before we can make a run upwards. All right, folks, you guys have a wonderful day. Rates are about the same as where we left off yesterday. Hope you guys have a great day. Thanks for watching. And if you guys want to receive these on a daily basis, stop by Mike's Daily Market Report and subscribe. Otherwise, I'll see you guys tomorrow. Have a good day.